Ever wondered if you can switch your apartment for a house just because you've bought a flat at some point in your life? And not that you regret the decision that much, but it's more like you prefer having a house instead. Well, I'm in the same position as you, and let me tell you what you can actually do to change the circumstance from having an apartment to having a house instead. You see, the main benefits of having an apartment is that you can actually get onto the property ladder fairly quickly by buying a flat. They're relatively cheaper than houses in general and tend to have much lower maintenance costs just because you are a flat in a block of flats. So it's not only up to you to repair the roof, for example, if something happens. Whereas if you're a house owner, it all falls to you and on your budget if the roof starts leaking. So there are pros and cons of having an apartment when compared to having a house. And it's pretty good to have a flat at the beginning if you're just trying to stop paying rent to somebody and move out on your own, get a mortgage, buy a flat, and start paying off the equity that is your property now. However, if you do have a partner and you're thinking of having a separate office space or growing a family or getting a pet, or taking care of your parents, for example, anything that requires a bit more space, or just want to be a bit more comfortable and have some extra space, not be in a flat anymore, then in that case you've probably already started thinking about how you can switch from the apartment into buying a house. Well, exactly in these circumstances comes in the power of porting a mortgage and refinancing. Now let's get down to basics first of all. A mortgage is a loan, a huge amount of money that you get from a bank or a lender. In order to give you the property, they usually do a thorough check of your previous financial history, and you also need to pay in a deposit amount, which is between 5 and 15% of the entire price of the property you're about to buy. When they give you a mortgage, that mortgage and your deposit goes into the seller's account and they give you the property. However, let's say that you've decided you've grown bored of this property and you want to switch into a new property without changing the actual mortgage. And why would you do that? Well, there are a few reasons that you may want to keep your current mortgage. For example, interest rates. When you get a mortgage from a lender, they give you a fixed interest rate. The interest rate is the chunk of money you pay extra to the lender each year because they lend you the money so that you can buy your own property. That interest is actually also called cost of finance or financing cost. This is how actually the bank or the lender profits from you getting that loan out. So when you took out a mortgage, it's usually the first several years are fixed rate. So you might have taken out a mortgage at a 2% or 3% fixed interest rate right before the recession at the moment. Now that we're in a recession and inflation is through the roof, what the government does is apply some policies to tackle that inflation. Plainly said, to tackle the recession, lenders are rising the interest rates so that people don't get mortgages as often as before. This slows down the economy and in turn makes inflation go down, or at least not rise as much anymore. Anyway, why would you want to keep your mortgage? Because let's say you took out the mortgage 3 years ago, right? So you've probably signed the mortgage offer that was 2-3%. And now, 3 years later, interest rates are around 5%. So it will cost you 2% more, 2% on top of the entire loan that you took out every year to pay as extra to the lender. So let's say you want to keep the same offer and you still have several years left on your mortgage and you want to switch to a house. This is what porting a mortgage means. Porting means using the same mortgage, but using it on a different property. So now you can port the same mortgage to buy a house. So that's what porting a mortgage is. So when you decide to switch your apartment to buy a house, that means that you need to sell the apartment and then with the money, pay out the mortgage and then use the remaining money as a deposit to take out a new mortgage for the house. And that's really complicated. And lenders have thought about a product that will keep you with them for a bit longer. And that product is made so that they can keep you as their borrower. This is called porting a mortgage. If you have already ported a mortgage, then please let me know in the comments how it went. I would really like to hear your stories and how you switch properties with the same mortgage. So porting a mortgage is you get to keep the same mortgage offer same interest rate, same requirements, which you've already met pretty much. So you're 99% sure that they're going to approve you and lend you the money. So you can go online, browse for a house, do some quick calculations how much deposit you need for that house. Then you can speak to your lender about porting a mortgage. You can tell them you already have a mortgage with them and that you have decided to buy a new property while also keeping the mortgage. And this is absolutely legal, and it's a product/service that they have thought about offering to their customers. This way you get to sell your apartment, hopefully for a bit more than you bought it for. With that money, you get to pay out the previous mortgage, and bear in mind that the lender will help you out and automate all of this so that you don't need to make all of those transactions. You sell the property, that money pays off the existing mortgage. Then the lender issues a new mortgage with the same interest rate that matches the price for the house you want to buy. Remember that when you bought the property, you actually had a deposit of 5 to 15%. You still have rights to that deposit, and for all of the period that you've been repaying your mortgage for that apartment, you've also been paying part of the equity. So hopefully you have a bit more percentage as part of your equity in the apartment now. So when you sell the apartment, actually the lender gives you back part of the money. They give you your deposit back, and they also give you money that equals all of the percentages that you paid during all of the mortgages repayments that you paid. Those percentages that you've repaid as part of the property, the lender gives you money for those as well. And hopefully you should also have a bit extra from selling the apartment to the seller. So all of that money you can use as a deposit for a house that is probably 2 or 3 times more expensive, and that way you can switch from an apartment to a house. So let's repeat again. Porting a mortgage is actually another way of refinancing. Refinancing is just another word for prolonging the current mortgage offer that you have. Let's say it expires in a few months, so you can prolong that, sign another offer. They might offer you different interest rates, which is absolutely normal because as years go by, interest rates change. So that's refinancing. However, if you want to keep your mortgage but switch the property, that's called porting a mortgage. And this is a really easy and seamless process. Banks and lenders have automated this and will help you out to port your mortgage because they do want to keep you as their borrower. So what you need to do is just find the buyer for your apartment and just find a house that you want to buy. Call your lender, tell them about you want to port the mortgage onto a new house, and then you're on the right track of becoming a house owner and selling the old apartment. If this video was helpful, then drop a like. If you feel like watching something else, then you can click on this video over here because YouTube thinks you really like it. I'll see you in the next one. Goodbye.